We're joined by James Cox, professor of law at Duke University and a former member of the NYSE Legal Advisory Committee. Professor, thanks for being with us today. I mean,
glad to be here.
What do you expect to be discussed? And I ask that given the fact that this is really a jumble and there are quite a number of threads that could be tugged on here.
Well, one of the things that ought to be on the agenda is when Sherrod Brown's going to finally schedule the confirmation hearing for the new chair of the SEC, Gary Gensler. I don't think there's going to be a lot of going forward. That's going to be a noteworthy action by the SEC until it has a chairman in place. And then that chairman's going to appoint somebody to head up trading and markets, which is going to be the section that's got to gather the information to figure out what to do about our irrationally exuberant markets that we've been witnessing the last 2 weeks.
Given what we know right now, and I realize that there are regulators that are taking a look at all of this, and I would imagine we're going to see investigations that go on for a period of time. I mean, just from face value, looking at this whole situation from all angles, is there anything that sort of strikes you as dubious from a legal standpoint?
No, it's not clear to me that is dubious. I do want to look at how the clearing agencies have been putting up and handling this fairly well. So we know that Robinhood made an announcement that they were suspending trading for several stocks, and now it's down to 5, I believe, at least purchasing those stocks because of concerns about meeting their capital requirements in the clearing process. I don't disbelieve them. I just want to think about how well the clearing agencies have held up in a situation like this, because I think that that's something we learned from the financial crisis in a different kind of market, is the important role that these clearing agencies serve, and it's important that they work. So we need to gather information there. We also have to gather information about what's happening with these short squeezes that we see. It's unnerving here. I think we depend on long buying and just like short selling to price securities. Markets serve a very important task of price discovery, and I think that dynamic is important. I think we need to take a hard look at that and think about whether those assumptions that our markets are working fairly well have been challenged in the last 2 weeks. When you see stocks run up, and now many of these individuals have lost lots of money, 75%. That's one of the risks they took in being idiots, quite frankly.
That's what you think they were, idiots?
I think they were idiots. I think, the idea that you're going to disregard tools of finance and just somehow they're going to drive a stock to some price that you think is justified, but not based on any sort of insight, is just nonsense.
Where does it end?
I think what's going to happen here is we've got to take a hard look at we know we have collars on market for big changes. But I think we need to think about putting guardrails up around individual trading in stocks so that not necessarily the stock moves a lot, but we need to have some limits on the ability of investors to be able to buy options and to buy short, et cetera, much more so than what we had before. So if we've learned anything from what's happened the last 2 weeks, we need to re-examine that question about whether we want to make leverage available to everybody and whether there ought to be some limits on that leverage.
Shepard Smith here. Thanks for watching CNBC on YouTube.